Hello and welcome, my name is Grega Hurat and welcome to a new video in which we will take a look on AUD dollar, dollar CAD and gold. On AUD dollar we are tracking a triangle here, a huge consolidation pattern which must be subdivided by 5 legs A, B, C, D and E, and it seems that this our wave E is still unfolding, and the reason why I think we will see lower prices here in wave E is this structure of this recovery, which, as I will show you on this daily chart, is has proved corrective. Okay, this is very choppy overlapping price action within this trading channel, and we know that this is characteristics of corrective movement. So I think this is wave B, still part of an incomplete wave E, which must be structured by 3 legs. So this was our first leg, wave A, wave B and wave C. Also notice that this reversal, sharp reversal that we are seeing this week has occurred from this upper resistance line of this triangle. So I think this is now ideal timing for more weakness into wave C. However, I am paying very close attention to these support lines, trend lines, and of course I want to see a daily close beneath this line before I may get completely sure that we are headed lower in another 5-wave decline in wave C towards parity levels. On a 4-hour chart, I think that this chart is also very important. Notice that decline from the peak, from this peak, is still not impulsive. Okay, we know that impulsive waves, 5-wave patterns, shows directions of a trend. Okay, so if we are bearish, if we want to confirm a bearish trend, we of course need impulsive price action, which could be unfolding already here on the 4-hour chart, but as I said, we still cannot count this as a 5-wave movement. This is still a 3-wave pattern, but the reason why I like the idea of a start of a wave C decline is because of this breakout right here. Okay, because of this trend line break, which suggests that this was a break of the lower support line of a base channel. Okay, so we know that this break usually occurs in the middle of a wave 3 of an impulsive structure. So this same trend line will then tend to react as a resistance if will be tested in this wave 4. So I like the idea of a bearish continuation here, but before we may get completely sure that we are headed lower, I of course need to see completed 5 waves of decline from this peak. Okay, so for now, once pullback gets underway, which could be a wave 4, of course, we will be paying a very close attention to this price structure, and of course in such case wave 4 must not extend above this 105 level, otherwise we will have an overlap between wave 4 and wave 1, and we will know that wave count is invalid, and in such case we will have to adjust the wave count. Okay, so for now we need 5 waves of decline. When we will have 5 waves down here, we will be looking for even lower levels in wave C of this wave E, which is part of a huge triangle in the middle of a larger bullish trend. And now let's take a look on dollar CAD. On dollar CAD we have very similar situation. On this weekly chart we are also tracking a triangle, but this is called a running triangle. This is wave A and wave B. Notice that wave B moved beneath this start point of wave A. This is characteristic of a running triangle. This was then wave C rally, wave D, and now it seems that we are headed even higher in wave E. Okay, so we also expect more dollar strength against Canadian dollar, similar like on AUD dollar. Okay, so now I think that this wave E is still underway, and if my bias is correct, then of course wave E must not extend above this wave C critical region. So this is my critical region and not this one. Okay, on the daily chart you can see the reason why I actually turned bullish now on dollar CAD, simply because I need to respect the price action, I need to respect these trend lines. You will remember that that we actually turned bearish after this trend line breakout that occurred few weeks back, and notice that now we have something similar but to the upside. Okay, so if we will stick to our forecasting technique, then of course we need to respect this price action and we should look for higher levels in wave C. Now here we have this 4-hour chart where actually we can count only 3 waves of decline from these highs, and also notice that this wave A was almost equal in pips compared to wave C lag. Okay, and from here we can see a very aggressive bullish reversal. Also notice that this current bullish reversal extended well above this upper channel resistance line, which again is confirmation for a third wave price action of a 5 waves of recovery. Okay, so we can see that this market is probably trading impulsively from here because this trend line was broken, while in this downtrend notice that this support line was not broken. Okay, so here we were trading within this trading channel, which is characteristics of a corrective price action, while here we are already trading out of this channel. So this tells me that this market is trading impulsively, and most likely we will see even higher levels. Okay, so if my bias is correct, then critical region should be at 0.988, because once wave 4 gets underway, then of course this wave 4 must not trade into territory of this wave 1. So I think this market is headed higher. I know that this is not matching with our euro dollar outlook or cable, but just look at some euro crosses and pound crosses and you will see that those markets are moving very sharp and commodity currencies are very weak, which I think it has something to do with commodity markets and metals. So I would not be surprised to see CAD weakness and Aussie weakness, while euro and cable could gain further. Now let's take a look also on gold. Gold was extremely bearish in this week. Actually, first let's take a look on this weekly chart. As you know, we have long-term bullish picture on gold. This was wave 1, wave 2, extended wave 3, and consolidation wave 4, which I still think has ended here, which I marked also a critical region around 1524, I guess it was the low. Anyway, I'm looking higher here while the market is trading above this critical region, and this pullback of course should then prove corrective. On a daily chart we can see that this is actually still a 3-wave movement. Okay, notice that prices already reversed from this lower support line, which could be support line of a corrective channel. So I think that it still would be much too early to turn bearish on gold, okay, because this larger picture is still up, and in this daily chart the setback is looking corrective. Okay, however, we need 5 waves down in wave C, so maybe we'll see another low next week and then a push higher, and we will be looking for this one more low while the market is trading below 1682 critical level. Okay, if the market will just extend higher in impulsive formation from these recent lows and deeply into this wave 2, then I will probably mark this as a wave B triangle, and then we will be looking higher. Okay, so for now I am prepared for a possible move to the upside, but as I said, for the near term I think that there is one more push down in wave C. Okay, okay traders, this is it for now. Before I sign off, just let me remind you that now when it's the Christmas week, next week I will be away, and actually I will be back with you on just a second, on Wednesday, January 2nd. However, the next week Alex will be here. Alex will take care of you, but keep in mind, because of holidays, markets could be very slow, so he will make the updates only if necessary, only if he will spot something interesting, and updates will be only on the intraday page. Okay, so there will be no updates from me on the Elliott wave counts page. Okay, traders, this is it. Have a good holidays and Happy New Year. Bye.